Hey everyone, today we're going to be talking about home insurance. It's a really important topic, especially if you are currently shopping for a home or if you're looking to get a home. Also comes into like for renters if you're looking to get some insurance for your personal items. So one of the biggest things about home insurance that we want to discuss is like what is the process and what to look for when you're shopping for home insurance, and also the details that come within a policy as well. So, like home insurance offers like the financial protection of some of the most your valuable assets, including your home and your belongings. However, shopping for home insurance is often treated as an afterthought, and instead of an important decision in its own right, that can leave homeowners vulnerable to a financial ruin should a disaster strike. So essentially, we want to guide you guys to help you understand what you need to know when shopping for home insurance so you can make the best choices for your needs. So let's kind of talk about what does home insurance cover. So there's essentially six things that the home insurance covers. You're going to be talking about the dwelling, the main structure of your house, which would include like the roof, the walls, and the floor. Also going to have what they call other structure. That would be like a detached garage or fence. Then you have your personal property. So personal property is if you were to move from the house, what are the stuff that you would take with you when you're moving from that location? The fourth thing you're also going to have is loss of use. So also known as additional living expenses. So essentially what that is let's say the home is unlivable. Let's say you don't have any running water and the insurance company needs to put you like in a hotel. That's what loss of use is. You can't use your house anymore as well. Or even if you're renting, let's say the landlord files a claim on your behalf, or even you file a claim and there's a pipe break and there's water all over the place and you can't stay into that place until the landlord's insurance company fixes the situation. As a renter, your insurance can put you up in a hotel while the process is going as well. The fifth thing is personal liability. Essentially what that means is if someone in your home gets injured and they decided to file a claim against you, or let's say heaven forbid, they even try to sue you, the insurance company will help you to protect the liability for that situation. And the sixth one is medical payment coverages. So if someone gets injured in your home, like for example, a dog bite, your dog bites one of your guests, you file a claim with the insurance company, they'll take care of that type of situation. Okay, so you also have what they call as a deductible. So essentially, what a deductible is your agreed out-of-pocket expense for the claim. So there's two different ways you can have a deductible. You have a flat-out amount, or you can have a percentage of the overall cost to repair your house. So, for example, let's say your house is a total loss, and the insurance company says your total limit for coverage A, your dwelling is $500,000, and it will be 10% of coverage A, which would be like 50 grand. So that would be like your deductible for when it comes to percentage. That's an extreme example, but I just want to give you like we just want to give you like an example of what things may look like as well. So let's also talk about like limits. One of the misconceptions is for insurance is like it's whatever, like they'll cover whatever it costs, they'll cover it. Not exactly. The insurance company, they're there to ensure that their profitability, but they can still help you in a time of need. So you're going to have like your limits. So usually the limits is going to be how much it will cost to rebuild your home, which would be coverage A. Coverage B is usually like 10% of coverage B. So, like, let's say, for example, if your home is what, $1 million, and then coverage B will be 10% of that, which would be 100,000. That's the limit for that as well. So majority of these limits apply to all your different coverages as well. So just kind of keep that in mind when you're doing your shopping going forward. So let's see what to consider when customizing your coverages. So another misconception is my policy covers anything. It doesn't matter what happens, it's going to cover automatically. Unfortunately, I wish that could be true. Unfortunately, that is not true. Your home insurance policies does not cover everything that may happen to your home. You have what they call exclusions. So the two words to remember when filing a claim or dealing with home insurance is sudden and accidental. Sudden would mean, let's say for example, a pipe bursts and then water starts to come into your house. That's sudden. Something that is not sudden is a pipe's been leaking for several weeks, where now there's rot and deterioration. That's not something that's not covered. Let's say, for example, your brakes are worn out and they just go bad. You file a claim for your brakes. That's not sudden. It's been over time. It's been wearing out. So that's something to keep in mind. Accidental, when they say accidental, that means that you didn't intentionally try to cause harm to your property. For example, if someone breaks into your house and steals something, you were not complicit in that theft. Arson would be something that would not be accidental because you intentionally set fire to the house. So those are the two things to kind of remember about. So within those policies, you also have exclusions. Exclusions would be like repeated seepage, foundation issues. Let's say you have like cracks in the structure of your house. That's something that probably wouldn't be covered under your home insurance. Fixing a plumbing pipe itself, that's like wear and tear. So that's something that wouldn't be covered. The ensuing damages from the water, that would be something that would be covered as well. Another thing to consider when customizing your coverages for the insurance is depreciation. So how depreciation works is, say for example, you buy a couch. The couch gets damaged. You buy it like 5 years ago. At a certain point in time, it costs a certain amount of dollars, but over time, the value of that couch is not what it was. The difference between what you bought it then 5 years ago to what it costs now, that gap in between, that's your depreciation. So majority of insurance policies have what they call recoverable depreciation. So what they're saying is, okay, it's a covered loss. We'll help you pay for your couch, but we'll give you the price it was 5 years ago, and then we will pay you back the recoverable depreciation once you replace that item. So this is for math purposes. Let's say the couch was $1,000 5 years ago, and now it's $500. The insurance company will pay you $500 up front, and then once you purchase that couch again, you will send in the receipt, and they'll pay you the difference, the additional $500 to get back to that $1,000. And the reason for that is the insurance companies want to see that you've taken the steps to use that money towards replacing that item and not using that money for something else. Because if they pay you automatically $1,000, you may not want to buy that couch. You might use it for something else. So they want to see you made an effort to replace that item as well. Also talking about limits. Within insurance policies, there's different types of specialty limits. So for example, let's say you have all these Gucci handbags, Louis Vuitton handbags, and Louis Vuitton, Gucci, those handbags are really expensive. Let's say someone steals all those items and it comes up to $100,000, but usually within home insurance policies, there's a limit for thefts of purses and handbags, and it's usually between $5,000 to $10,000. So if all those items are stolen, sometimes the insurance company may just give you the limit of what that particular item is. Collectible cards, jewelry has limits to it. So if you have a Van Cleef and that thing's stolen, the majority insurance company is only going to pay you up to $5,000, maybe even less, maybe even higher. It kind of depends on what you have. So one thing to consider about is scheduling the things that you believe are precious to you. Your jewelry, your handbags, putting what they call it is a rider or scheduling it. So, and what scheduling it means, you let the agent know, hey, I have these items that I want to specifically put on my policy, and so just in case something happens to it, I can get the full reimbursement for it. So that's something definitely to think about. Not everything, as we talked about, not everything is going to be covered within an insurance policy. So we have these things what they call endorsements that changes the language of the policy. So for example, a water backup. So let's say there's a clog in your toilet, and due to the clog, water overflows from the toilet. That's usually something that's not covered. Most insurance companies don't want to cover that. But they do have what they call endorsements that changes the language of the policy, where now that is covered, but it'll be covered up to a certain amount, like $5,000 to $10,000. So always kind of talk with your agent when you're kind of shopping for those policies. Also look up the reviews for these insurance companies. Sometimes your premiums, let's say you get a really good premium, it's a cheap premium. You may not be always getting the best policy for that premium. So sometimes the cheapest premiums are not always the best premiums for you as well.
So I will just say I recently was in the process of shopping for homeowners insurance. I just bought a house, and what I learned was that depending on where your house is located, some insurance companies may not be very open to insuring your home. And so it was the hardest part of the home ownership process for me, was finding an insurance company to cover my home. And I think it's because in the area that I live, they have had a lot of claims come through. And so anyway, don't be discouraged if you don't get insured by the first few insurance companies that you contact.
Right.
You have to continue to keep looking. And one of the things that they share with me, this is a letter that one of the insurance companies sent me rejecting my policy, and they basically said, we are unable to insure your property based on several factors used to calculate risk, including but not limited to the age of your home, but my home wasn't that old, property replacement costs and square footage, fire and weather risk in your location, and your consumer credit history. Please call us if additional detail is needed. So I think there are multiple things that go into whether a company is going to insure you or not. The ones that I just mentioned are all risk factors that they look at when it comes to if they're going to insure you or not. But I fortunately did end up finding one, but I probably contacted a dozen companies before I got one that would insure my home. I have a question for you.
Yeah.
So you're very versed in the insurance space. How long have you been working in the insurance industry?
I've worked in the insurance industry for approximately like 6 years.
Oh wow.
You know what? I take that back. I think 8.
8 years. Wow.
8, yeah.
Okay.
So I've come across these different situations where I've seen some of the people who get home insurance and they're not fully aware of what's going on with their policy, and then when a peril happens, they don't know what to do because they didn't read their policies, or they assume that many things are covered when it's not. And sometimes if they have a lower premium, they think, okay, I got a lower premium, and it's like, damn, I didn't have this covered. This is not covered. Woo. Okay, so to answer your question, yeah,
A year.
Yes.
And I was also asked, like, what's the biggest piece of advice you would give our viewers on this topic based on, you know, talking to so many people? Like, what's the biggest thing that you think they should consider, just out of everything that you talked about, that maybe they need to think through?
I would say the biggest thing to consider is making sure you have the right kind of coverage for your policy and the right kind of endorsements. Always read the exclusions. One of the biggest things that I've seen is people assume that if something happens to my house, I am automatically covered for anything. That is one of the biggest misconceptions about the insurance policy. Make sure to read your exclusions, and then whatever is excluded, see if you can get it covered. If you can't, then always try to save up for something of that nature which you believe is not covered underneath your policy. So.
I'll also say, don't wait until something happens to look at your policy. I will be the first to admit, I had a situation happen where one of my pipes burst in my apartment. I thought I had insurance because I usually have it. And a lot of apartments, like if you're renting, they require you to have it. But this particular apartment, they didn't check to see if I had it. I thought I had it. Pipe burst, no insurance. And so I would just say, like, be on top of things so that when something happens, you're ready. And instead of like trying to be reactive to get covered after something happens, because it's not going to work like that.
Exactly. So that's all we had. Let us know what you guys think. Any comments you guys want to add? Did you find this video beneficial? If so, please share this video to any of your friends and family who think they may benefit from this. We're trying to grow this page, so any type of help to grow this page would be greatly appreciated. And as always, please like, share, and subscribe. Okay.
Thank you.
Thank you guys. Take care.
Bye-bye.
Bye.